Of course, when we talk about the cryptocurrencies, we always take into consideration the captain of the ship, the Bitcoin, and eventually Ethereum, if you want to consider. But usually, I guide my not my sentiment, because usually I don't trade on sentiment. I trade the patterns, and they may change the sentiment very fast. But when I search for for momentum or trends, I always look into Bitcoin. Okay, so and eventually Ethereum will also start to follow Bitcoin, and then all others will tend to react, based on the measures. Bitcoin remains inside of an ascending channel. This is a parallel structure well defined on Bitcoin, and I admit, while inside this structure, we should not try to move it, unless of course you are already well positioned inside the market and you just holding your positions or somehow just managing your trades. I admit this is not the place at this point to consider any type of involvement with the cryptocurrencies. And I will show you a few examples why I don't think we should act now. We have this bearish shark pattern projected before at 106.59. I called your attention last week to this specific pattern on Bitcoin. As we can see, we had a very, very shy pullback towards the fractal support at 102.12. That's a new fractal support level after the formation of the pattern. Of course, very far away from the default expectation. We expected a deeper pullback towards 97, actually not towards 97. We need to go here to the fractal resistance, 94. 600, so very far away from the default expectation, at least to the 38% Fibonacci. We saw then the market breaking above it, practically invalidating the sequence or the pattern itself and forming a new resistance at 112 case. That being said, we're still inside the channel. I don't think we should react while inside the channel. If somehow the price breaks below the most recent support levels and eventually recovering the daily fractal resistance at 105.700, I admit Bitcoin may print a deeper pullback and even start a deeper retracement from these levels. And of course, we will always target the Fibonacci levels. Let me also add the 23, the very first Fibonacci level. So if the price fails below or falls below this daily fractal support, I admit the price may search for the Fibonacci levels, previous support levels, previous fractal supports, and the 38% Fibonacci and 97Ks. I will not be surprised to see that if the price breaks below the channel support level. And that's all for Bitcoin. Nothing more to add. Nice bullish momentum while inside the channel. I admit the price may scale and squeeze higher. Nothing to fear for those who are, buying the market, or those who are holding, buying long positions. I admit it's a nice structure to hold your trades. Now let's jump into some others, and this is one of the structures that I want to show you. And I bring multiple examples of similar situations here. What we have here is a triangle after a swing high. Okay, we have a triangle starting to unfold after a very strong, impulsive, bullish momentum. Usually, by the books, that calls for momentum to the upside, so pay attention to a violation of the resistance levels, in this case for Ethereum 27.44. If the price breaks above resistance, we may see the price scaling and searching for the next Fibonacci levels. Since we will abandon the 50% Fibonacci level, if that happens, a breakout above the resistance, the market may search for the next Fibonacci above. We have also Solana, very much the same. I was expecting this shark pattern completed at 179.60 to print a deeper pullback, and I can be, I can be wrong about the potential move to the upside, and those triangles eventually will break lower. The good part of these triangles, and let me go back to Ethereum, is you can also trade it for the downside. If the market breaks below the triangle, you can trade, you can trade both ways. You just need to wait a clear violation of the resistance or a clear violation of the support level. So in Solana, we have very much the same situation here. Not a triangle, we have what we may call an ascending wedge, and I will not admit a retest of this resistance again before the pullback, so pay attention also to this ascending wedge also on Solana. A clear breakout of above the structure resistance may trigger momentum or a next swing high for Solana. At the same time, if the price breaks below the support or the channel support or the structure support, better applying here, we may see the retracement that we expected after the formation of the shark pattern at 179.60. Then we have XRP, very much similar situation. We have a decent structure already starting to emerge. Wait for the violation of the resistance and eventually a move towards the golden Fibonacci extension projected above, or wait for the violation of the support, which may trigger or favor a move to the downside, and eventually the 113% Fibonacci extension may support this move to the downside eventually if reached. So pay attention also to multiple possibilities: a resistance breakout above or a breakout of support. Then we have Dogecoin, very much similar situation. In this case, we are unfolding into a triangle here: higher highs, lower highs, higher lows and higher higher highs. I'm sorry, higher lows and lower highs. That's correct. Sometimes my English takes me unprepared, but Dogecoin, very much the same situation here. We are stuck inside the triangle, and I don't think we should do anything while inside these levels of support and resistance. And that's one of the reasons why I'm saying I don't think the cryptocurrencies at this point are inviting you to do anything. I think it's inviting you to go fishing. Okay, so basically wait for the breakout of support or the breakout above the resistance levels, also for Dogecoin inside what we may call a triangle after a very fast swing to the upside. We have also Cardano, nice triangle again. Wait for the violation of the resistance or the violation of the support levels. Don't try to anticipate. We are stuck inside this triangle, and it may take a lot of time. We don't know how long it will take to abandon the triangle. It may take a lot of time to leave this stage. Okay, the same we have for Polkadot. Actually, Polkadot is a very small difference here. We may see this as a potential channel to the downside. We don't have a clear structure yet, but that's something to consider. And I'm already pushing my my Fibonacci expertise and the variables to identify some of those harmonic patterns that I have been showing you in the channel. So basically, if the price breaks above these levels of support, we may see the price pushing lower, and eventually I will pay attention to the 113, or we should be paying attention to the 113% Fibonacci extension level, $3.63 below the previous support. Okay, this is one of the possibilities for Polkadot. At the same time, if the price breaks above the resistance level, in this case we have the resistance at $5.12 or $5.11, if the price breaks above this resistance, and we are far away from this resistance, we can also start to project the eventual shark pattern above. And for a very simple reason, we are now observing the eventual false breakout of the support. Okay, if the price starts to recover, we will consider this as a false break of the previous level of support, and usually, as I said multiple times, the price tends to search for the golden Fibonacci extension level after the false breakout of resistance or support. In this case, it's a false breakout of the support, and the price may search for the golden Fibonacci above the resistance level. Okay, so this is just one of the possibilities, or actually I show you multiple possibilities. One of them, the bullish alt-bat pattern, $3.63, or and eventually, if pushed higher, the golden Fibonacci extension at $5.60 basically may force retracement. Then
transform your trading with Forex Analytix new platform. Introducing the complete market analysis platform, precision analysis, real-time insights. Subscribe today and save 40% on monthly subscriptions. Join us now and elevate your trading strategy.
This is chain link, and we are observing a retest of the neckline. This is a head and shoulders pattern formation. We are seeing the price trying to recover the neckline, but it's not being easy. It's struggling to recover the trend lines, the neckline actually, and there's a few things that we need to call, that I think I should call your attention to. One of them, the potential head and shoulders pattern formation on a lower scale that may start to unfold here. We have a neckline basically at $14.85. So if you want to consider the $15 barrier or price zone as a neckline for the head and shoulders pattern. So if the price breaks below the support, we may see the cryptocurrency breaking the support, and it will favor a move to the downside. Or if the price breaks above the resistance, and this is one very specific pattern that I want to show you, because we need to measure first of all this pullback right here. We can see very close to the 78.6% Fibonacci retracement level, 1732, and that calls my attention to the eventual butterfly pattern above the resistance. Okay, usually when the price approaches there, the 127, the 78.6% Fibonacci retracement on point C. So we are talking about the X, A, B, C, D, actually the point B, I'm sorry, C and D. When the point C approaches the 78.6 or touches the 78.6% Fibonacci retracement, and then of course considering the price will respect the previous support level and break above the resistance, we always tend to consider the butterfly pattern. Okay, 127% Fibonacci extension after the 78.6 at point B. That being said, it's all for today. I hope you enjoy. If you are a Forex trader or a commodities, I also covered the Forex market earlier today before this video. So if you have interest on the Forex market, make sure you check the link at the top right of your screen. You will see a direct link to that video, and don't forget to subscribe the channel, press that activate that notification bell, and some of you are already aware, because the content here is time sensitive, meaning it depends on market timing. So I invite you not only to subscribe, but more important than the subscription itself, it's the bell, in order to to get synced with some of these price zones that sometimes when you go and you come back after 1 week, the pattern already vanished, already already worked, or at some points already invalidated, whatever. So it's time sensitive, so press that bell in order to get the notifications once I publish some of this content. You have a second link in the description, which is a promotion for the actually a subscription promotion for you to join the Forex Analytics. From there you have access to different trading methodologies between harmonic trading, Elliott wave, macro analysis, basic technical. You have candlestick pattern analysis, 11 professional traders, me included, working together to provide you with the best markets and technical analysis in the market. So I invite you to join us there. We have, of course, a chat room for our subscribers where a lot of people like to participate, learning, sharing experiences, always related to the markets. So we are always focused, 100% focused on the markets. We try to to not deviate too much from our main goal. Of course, we laugh, we have conversations there, but our main goal is to be focused and be prepared for any type of market environment. So I invite you to join the Forex Analytics team. You have the link in the description. Make sure you take advantage of the promotion that we are now that we have running in our platform. Now I invite you and I welcome you there. So that's all for today. I hope you enjoy and that brings some value to your journey. And I hope to see you in the next video. See you there and stay well.